All right, we've got a list of top dividend stocks for 2026. But hold on, we're not just going to read you a list. No way. We're going on a mission.
That's right, we're going to find the hidden patterns, the secret connections between these companies that most investors totally miss. So let's dive in.
Okay, so let's just get right to the big problem, right? It's the one we're all wrestling with as investors. The S&P 500 has been on this just incredible, record-breaking tear. And hey, that's great, but it also creates a massive challenge for all of us. How in the world do you find any real value when it feels like everything is already priced to perfection?
And you know what? It's not just a feeling. It's a fact. Just look at this number, 31. So what is that? That's the price-to-earnings ratio for the entire S&P 500. Now, to put that in perspective, a lot of people start getting nervous when it hits 20. So, over 31, we're talking historically very, very expensive territory here. The challenge couldn't be more real.
Exactly. And that right there is why just grabbing a list of top stocks isn't going to cut it anymore. You've got to dig deeper. Which brings us to our very first surprise connection. And you're not going to believe this part, but it turns out several of these top-tier companies are all linked by one single aggressive strategy.
All right, let's have some fun with this. We're going to play detective for a second. So look at this question. What on earth is the hidden link between a car dealer, an insurance company, and a packaging company? Seriously, from an investing standpoint, what could they possibly have in common? Just think about that for a moment.
Okay, and here are the actual companies. We've got Lithia Motors, Brown & Brown, and Sonoco Products. I mean, on the surface, these guys are in completely different universes. You've got car sales, insurance policies, and making like cardboard tubes. It just seems totally random, doesn't it?
And boom, there it is. That's the answer. They are all on a massive shopping spree. The official term for this is growth by acquisition. So instead of just trying to grow their business the slow, steady way, they are literally out there buying up other companies, gobbling up the competition, and expanding their footprint at a, frankly, staggering rate.
And look, if you want proof of how powerful this strategy is, just look at this quote. This is straight from the source material about Brown & Brown. Their revenue soared 35% in 1 year. 35%! That is not some small, steady little bump. That is explosive, game-changing growth, and it's fueled directly by buying other businesses. It's a clear pattern of just pure, aggressive expansion.
All right, so that's one really powerful pattern to look for. But let's keep going. Let's see how this all connects. Because our next hidden link is, I think, just as surprising. This one is all about companies that don't just accept the price the market gives them, they have the power to actually make the price.
That's right. So here we go again, puzzle number 2. Another one of these pairings that just seems completely random at first glance. You've got an insurance company on one hand and a water utility on the other. I mean, one deals in financial risk, the other deals in, well, the most basic thing we need to live. So what could possibly be the link there?
So, the companies we're talking about here are Hanover Insurance and H2O America. And, would you look at that, Sonoco Products is back for round 2. Now, this is a really important point, so don't miss it. These patterns can, and often do, overlap. And when you see a company that fits into multiple patterns, well, that can be a sign of a really, really robust business.
And here's the answer. It's all about pricing power. You know, this might be one of the single most desirable traits any business can have. It basically means that when their own costs go up, inflation, materials, whatever, they can just turn around and pass those costs directly onto you, the customer, without really losing any business. It's the ultimate sign of a strong, almost indispensable company.
And once again, the data from the source backs this up with cold, hard numbers. Look at Hanover Insurance. They weren't shy about it at all. They jacked up renewal prices by 10.5%. The source also mentions H2O America getting approval for multiple rate cases. See, they're not asking for permission. They are telling the market what the new price is. That right there is real power.
Okay, time for our final, and you know what? This might be the most powerful connection of all. This strategy is basically a company taking a giant pile of its own cash and placing a massive bet on itself. It is one of the biggest signals of confidence you can get from the people who know the business inside and out.
And the two companies we're looking at for this one are Globe Life and the financial data giant Morningstar. Two more absolute top-tier companies, and they're both making the exact same powerful move.
So what are they doing? They are aggressively buying back their own stock. You'll hear this called share repurchasing or buybacks. So what does that mean? Well, the company takes its profits and literally buys its own shares off the stock market. This does two really cool things. First, it reduces the total number of shares, which makes every single share that's left just a little bit more valuable. And second, it's like a giant flashing sign to Wall Street that says, hey, we think our own stock is a bargain right now.
And just look at the scale of this. This is what's really incredible. We are not talking about some small symbolic buyback program. The source material points out that Morningstar has a new program to repurchase up to, wait for it, $1 billion in shares. A billion, with a B. That is just an absolutely enormous vote of confidence in their own future.
Okay, so let's recap. We found three huge patterns hiding in plain sight. You've got the shoppers buying other companies, the price makers who set their own terms, and the companies betting big on themselves with buybacks. They are all signs of a really strong business.
They are, but this is where things get interesting, because Alex and I don't totally see eye to eye on this. We've actually been debating which of these patterns is the real ultimate takeaway for anyone investing for, say, 2026.
All right, so here's my take. For me, it's all about pricing power. It is the #1 purest sign of a truly great, durable business. Why? Because it means you have a moat around your company that competitors just can't cross. It's about sustainable long-term strength.
And see, I hear that, but I think that's a little too passive for the world we're in now. I think you got to be aggressive. These bold moves, the acquisitions, the huge buybacks, that's how you actively create value and go out and win the market. It's all about playing offense, not just defense. Aggressive growth is the name of the game.
Okay, so look, we can go back and forth on which strategy is best, but here's something we 100% agree on. The source data points to one really critical warning and one absolutely massive opportunity for everyone watching. And honestly, this might be the most important part of the whole thing.
And here's the warning. Nothing is a sure thing, ever. I mean, this entire analysis is based on a list of top picks, right? But even within that list, the source notes that companies like Stepan and FactSet actually missed their earnings or revenue targets recently. It's just a crucial reminder that even the absolute best companies can hit a speed bump. You always have to do your own homework.
But, and this is the big but, here's the opportunity. And is really the whole point of what we've been talking about. The big takeaway is that even in a crazy expensive market like this one, these kinds of quality companies are still out there. If you can train yourself to stop looking at just stock tickers and start looking for these deeper, hidden patterns, the shopping sprees, the price makers, the big buybacks, you can absolutely still find some incredible opportunities.
So we're going to leave you with a challenge. We've just shown you how to look past the surface of a list and find the real story that's hiding behind the stocks. So the question for you is, now that you know what to look for, now that you can spot these patterns, what hidden connections are you going to go out and find?